All right, what's going on, everyone? Good morning and happy Monday. Let's do a quick sound check here in the Essentials room and over on YouTube. And as always, hope everyone had a good weekend. Back to the grind. All right, guys, I got to drop my wife off at an undisclosed location before the open. So I'll do my best here to keep things short and sweet. For those of you here in the Essentials room, I will be back this afternoon at, let me see. I'll be back here in the Essentials room at 12 p.m. Central for an Ask Me Anything session. So anything you want to ask me, I'll be here for that at 12. But all right, guys, quick look here at the futures. And the S&Ps are plopped right on top of that daily 50. So kind of the same theme as last week. If the bulls can't scratch and claw and punch, everything points towards the market wants to go lower. So first thing I want to show you, let's get the S&Ps up here. And as far as the weekly chart goes, one of my favorite parts of the Big Three squeeze is the bull score and the bear score. So that takes momentum, structure, moving average crosses, takes all of our criteria and ingredients, and then gives us a report card for the bulls and for the bears. So remember, the best possible score is 5. So one theme that I'm seeing from the scoreboard is that as a general statement, the bulls still have control on the weekly charts. So on the S&Ps, the bulls are up 3 points to 0. The IWM, the bulls are up 4 points to 0. The bulls are up 3 to 0 in the Qs. For the Dow, the bulls have 3 points, the bears have 0. Even Apple after pulling back. The bulls still have a little bit of edge. Bull score of 4 and a bear score of 0 for Netflix. Bulls are up 4 to nothing on Tesla, on the semiconductors, on Nvidia. Bulls are up 3 to nothing on AMD, 3 to nothing on Amazon, and then lastly here, Google. The bulls are also up 3 to 0. So heading into this week's trading, that tells us weekly structure, momentum, trend, etc. Everything still works in the favor of the bulls. So that's a positive. Now the issue at hand here is that for a lot of these weekly charts, it's been a pretty long time since price pulled back to actually test support at the weekly 21 EMA. For the S&Ps, they fired their squeeze back in May and June. Squeeze fired long, and ever since, you haven't had that reversion to the mean. There's names like Nvidia, where Nvidia hasn't tested the weekly 21 pretty much all year. Keeps going, and keeps going. QQQ fired a weekly squeeze back in March. And ever since that squeeze fired, you haven't had that reversion to the mean. Now, two names that have had that pullback, Apple and Microsoft. I think two of your biggest leaders throughout the whole push that we've seen over the last few months. So Apple here fires a weekly squeeze back in March. Off she goes, and now you're getting the pullback. Not the end of the world. Not the end of this potential uptrend. It's just that kind of action, that kind of strength away from that 21 EMA. It's not always all that sustainable. So if we're looking at a 15-minute chart, that's kind of the normal ebbs and flows of the market. 15-minute squeeze, fires to the upside, and once the gas tank is dry, everything should pull back to support. Now, what can trigger that pullback to support is when you have that overbought weekly chart, and then the bears start taking control on the daily chart. That's what happened here for Apple. It lost the daily buy signal. Momentum crossed negative. Then structure starts to break. And next thing you know, that daily squeeze fire is short. And where does it take price? Right down directly to that weekly 21. You saw the same thing for Microsoft. Weekly chart gets overbought. Momentum shifts negative. Structure begins to break. And now that daily squeeze fired short, taking price directly to that weekly 21. So the bulls have control on the weekly charts. But then if we run the scoreboard through the daily charts, we're finally seeing that shift. On the S&Ps here, the bulls have 1 point and the bears have 2. The weekly 21 is all the way down here at 430. So as that weekly chart is still a bit overbought, momentum breaks, the structure breaks, the squeeze fires short, like you saw for Microsoft and Apple, that can quickly take price back down to the weekly 21. Not saying that's what's going to happen, but I do think it's in the cards. And for what it's worth here, guys, there aren't any problems on the weekly charts, aside from the fact that we're a little overdue for a pullback. I might short the S&Ps for a flush towards 430, but so long as that weekly chart has a buy signal, I don't want to look for too much more than a flush down to support. Structure is still bullish. Momentum is still bullish. It's just that the squeeze already fired and it's a little bit cooked. So I think you can take that daily chart, look for the flush into support. I don't think you look for too much more, so long as you have that weekly buy signal. So that's kind of the theme here across the board. IWM on the daily chart. Bulls have 1 point and the bears have 3. So momentum shifts, a little bit of structure. The bears get the slight edge. For the QQQ, for the first time since, let's call it April, May, the bulls have nothing to stand on the daily chart. They have 0 points and the bears have 3. Squeeze fired short, momentum shifted. And now with price under the 50, bears have full control of that daily chart. And what that could lead us to is a flush down to that weekly 21 around 350. The Dow Jones still looks pretty solid. The bulls are still up 3-1. Let's see, Apple. Bulls have 0 points. Microsoft. Bulls have 0 points and bears have 3. Netflix has 0 points. 4 the bulls and 3 for the bears. Same thing on Tesla. You have the semiconductors here. Momentum broke, daily squeeze fired short, and now the bulls have pretty much nothing to work with. Again, though, the weekly chart still printing a buy signal. So the only thing you might get from that daily squeeze firing short could just be potentially a buyable pullback to the weekly 21. So you got to see it from both perspectives, where in the short term, the daily charts, the 2 hour, the 1 hour, the 30 minutes, they are showing signs of a pullback. We're seeing these signs in the context of really good looking weekly charts. Good momentum, good structure. They're trading above all the key moving averages. They're just a little bit cooked. Nvidia just fired a squeeze short. Bulls have 0, bears have 2. Now AMD here on the big 3 squeeze, that's a perfect short. Big 3 squeeze, A+ setup label is red. That means right here, right now, I have everything I'm looking for the ideal short. I have a squeeze, printing a sell signal inside the squeeze, and the stock is still trading near the entry zone. So I can trade it, and I can trade it right here, right now. If AMD opens up at 105, even if we still have a squeeze and even if we still have a sell signal, At that point, we're too far from the entry zone. So the goal for me is I want to find that squeeze, modified version of the squeeze with one of the big three buyer sell signals, and I'm trying to nail that timing. Want to buy my calls, buy my debit spreads, sell my puts, ideally right before the big move unfolds. More importantly, I'm trying to work that trade, trying to work that moment in time with the best risk versus reward possible. Because then what happens is if I can really lock in a good entry, I don't have to rely on a good win rate. If I can lock in a good entry, I can have a 40, 50% win rate and still come out on top as a profitable trader. If I get less than an ideal entry, then I better crank out a really good win rate. So for me, the ideal entry is when price is as close to that 21 EMA as possible. So therefore, AMD's got the big combination of a squeeze, an active sell signal inside the squeeze, and we're still near the entry zone. So AMD looking like a short, and then Google here. I don't think I'd try to short Google or Amazon. Reason being the scoreboard tells me it's not the best idea. Their weekly charts look good, and the bulls still have control on the daily charts. So Amazon, Google, kind of the exception to the rule. But then I think the S&Ps, the Qs, Apple, Microsoft, Netflix, Tesla, etc. If they haven't pulled back to their weekly 21 yet, and if very quickly the bulls can't fix the problems on the daily charts, start to shift momentum, start to rebuild the structure, I think what we're going to see through a lot of these names is basically the same thing you saw from Apple. Weekly squeeze fired. You got the big push. Remember, guys, a weekly squeeze, you're looking for maybe 8 to 10 weeks. Apple fired off back in mid-March. So that squeeze lasted closer to 4 or 5 months. That's way more than you typically expect to get. So I don't think in the grand scheme of things, a pullback here is the worst thing in the world. If anything, between all of us here, I wouldn't mind seeing Apple a little bit lower. I think for a swing trade where you can buy some calls and sit on it for a year, that monthly squeeze is setting up really nice. So is the 1 hour chart a mess? Yes. Are the daily 4 hour, 2 hour charts looking a little iffy? Yes. The weekly chart's fine. And the monthly chart has my favorite setup in the world. The monthly chart is an A+ squeeze. I wouldn't mind buying that a little closer towards 170. I'd probably grab some 200 calls that expire in a year, throw them in a separate account, and let the bad boy go. But that's the theme for the week, guys. Problems on the daily charts. And if they can't correct them, I think everything goes lower from here. I don't think the end of the rally. I don't think the end of the world. I think just potentially the ebbs and flows of the market on a weekly chart. And sometimes the ebbs and the flows of the market on a weekly chart will give you some ugly action on your lower time frames. But in the grand scheme of things, if I woke up this morning and I'm looking at a 1 hour chart that looks just like the S&Ps, I'm kind of praying for a pullback. Momentum's lined up, structure's lined up, the buy signal's printing. Can I get that a little bit closer to support? Then work a good risk versus reward trade? All I'm asking for. And then as far as open trades on our end, we're short McDonald's. I love me a Big Mac, but we're short Mickey D's. So, pretty rare. So these are the big three squeeze labels. Green means you have a squeeze and a buy signal. So the monthly chart for Google, or McDonald's rather, squeeze and a buy signal. Blue means you have a neutral squeeze. So the weekly chart just has a squeeze. It's not bullish, not bearish, just squeezing. And then red would be a squeeze and a sell signal. So yeah, McDonald's has a squeeze on every single time frame, which again is very rare. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 squeezes printing at once. And we got short based on the daily squeeze. Not based on opinion, not based on my personal thoughts on McDonald's, which are generally positive. We're getting short because the indicator says get short. Guess who I would not get short right now? Google. Why wouldn't I get short Google? Well, not based on opinion, but based on the signals. Bulls have 4 points. Bears have 0 points. Do I really want to get short a name where the Bears have 0 edge? And it doesn't make too much sense, right? So McDonald's here. Bulls have 0 points. The Bears have 5. Got the squeeze, got the sell signal, and it's an A+ setup. And what we're looking for here is a flush towards a bear target. So the bear target is just about 280, 250. I don't like being a pig, so I'll call it 283. Looking for a flush towards 283. And that's the only open trade we have for now. As far as longs, there's a few things out there that look good. And that's kind of always going to be the case. First Solar, for example. Yeah, First Solar looks really good. That daily squeeze is an A+ setup for a long. You have BK. BK is a beautiful setup. So on the squeeze labels, the 2-day chart, the daily, the 4-hour, the 2-hour, the 1-hour, and the 30-minute, they're all printing a squeeze and a buy signal. So that can give you some of the best moves you're going to get. 30-minute squeeze fires long. That triggers the hourly. That triggers the 2-hour, the 4-hour. All kinds of good action. And there's a few more out there, but point being, these are good setups. We're not in a market, and at least for now, is all kinds of supportive of stocks trading higher. We're not back in May, June, July. And I know I'm kind of repetitive with you guys, but I can't stress enough. It doesn't get any better than that. To trade aggressively and to trade aggressively to the upside, S&Ps have a daily squeeze and a buy signal. That fired long. They had a 2-day squeeze of the buy signal. That fired long. And then they had the weekly squeeze with a weekly buy signal. That sets the stage for everything that looks like BK have a really good chance of working well. Not only is BK a really good setup, you've got the wind at your back from the market. All right, and now that's where things have changed. BK is a great setup. Those S&Ps, though, we're not back in May, June, July. So it's not to say that you can't get long something like a BK and still make money. It's just more so you're playing a different probabilities game. So things to consider there. But all right, guys, that's what I got for you this morning. As I mentioned, I got to hit the road here in a couple of minutes. I did put the link for Wednesday's webinar in the alerts here in the Essentials room. So let me grab the links here for the good people on YouTube. And then if you guys have a couple things you want to look at, we'll try to bang a few out. All right, there's the link for the class and the link for the webinar. All right, let me see what y'all got. Hit me with your best stuff. Cheryl, I don't want to check out U.S. Steel. Don't make me do it. don't don't make me do it, Cheryl. Yeah, I saw this morning. Going to open up around $29. So Sam told me there's a rumor of a buyout. Crazy. So that's what, 25, 30%? Yeah. We had some calls here a few weeks ago, guys. I can't be too mad about it. We took a really good exit, avoided a huge flush. But had I known, they had a buyout rumor brewing. Shoulda, coulda, woulda. But yeah, that's. If anybody has some calls on U.S. Steel, it's not going to be the crappiest of Monday mornings. And then I think I saw Tesla was down 2.5%, 3%. Open around 235. Yeah, interesting. So Tesla's going to be a few bucks off of the weekly 21, down there at 230. Still has a weekly buy signal. So Gary, as far as Nvidia goes, I don't think it's so much an Nvidia thing. I think it's just more so kind of the same thing throughout the market. And the first two names that kind of kick off this pattern, Apple and Microsoft. But Nvidia, guys, Nvidia's been a total just animal. The rally starts back in January. Actually, here's maybe a better way to look at it. Percentage-wise, I like putting things in the percentages. The rally starts at 155 back in January. Goes on to hit a high of 475. Yeah, this is freaking nuts. so the stock went up 205% over the course of 7 or 8 months without a single pullback to weekly support. That's a healthy uptrend over here. Price pushes away from the 21, pulls back to it. They reload, brand new high. Price pulls back, they reload, brand new high. This year, Nvidia has just been straight line up. So I think it's a combination of two things. One, the weekly chart's a little overbought and tired. Right, the gas tank is kind of dry. Momentum is still positive, but it's on the decline. So momentum peaked back in July. Price keeps going higher. So pretty much, I think the weekly charts are just out of gas. And then with some of the problems developing on the daily charts, squeezes firing short, sell signals, etc. I think that combination could just take price back down to that weekly 21. For Nvidia, that's 370, 375-ish. But again, see it for what it's worth. At least potentially going into that pullback, Nvidia is a beast. If that's a 30-minute chart we're looking at, I want to buy that dip. I've got momentum, I've got structure, I've got moving average crosses. I just need a better entry. So I say that to say, if Nvidia does indeed pull back to 370, in the short term, that's going to feel really bearish. The daily chart will be ugly. The hourly charts will be a mess. Just don't lose sight of that really good-looking weekly chart. Anytime something prints the buy signal, I either want to buy it ideally in a squeeze, or I want to buy it on a pullback to the 21. So therefore, as good as Nvidia's chart looks right now, I can't do anything with it. I don't have a fresh weekly squeeze. And we're not pulling back just yet to support. So for the swing traders here this morning, what the pullback gives us, I think, is a bigger plate of opportunity. Shake the tree a bit, kind of reshuffle the board. And then I think if you're buying the Nvidias, the AMDs, the Qs, the S&Ps at the weekly 21, not a terrible game plan for now. But all right, guys, I got my wife staring at me, so I got to hit the road here. As mentioned, I'll be back here in the Essentials room at 12 p.m. Central for an Ask Me Anything session. Right? No questions off limits. And then Wednesday night, I'll be live for the webinar and the scanning session. And then we'll hit the ground running on Saturday morning with the squeeze class. Alrighty, y'all. So as always, thank you for your time. Welcome back to the best game on earth, and I'll talk to y'all later. Adios, guys.